Good morning, ladies and gentlemen. Welcome to the Orient Electric Q1 FY22 post-results analyst conference call hosted by Ambit Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dhruv Jain from Ambit Capital. Thank you, and over to you, sir. Mr. Dhruv Jain, your line is in the talk mode. Please go ahead.
Hello everyone, good morning. On behalf of Ambit Capital, we welcome you to Orient Electric's 1Q FY22 earnings call. From the management side, we have with us Mr. Rakesh Khanna, the Managing Director and CEO of the company, and Mr. Saibal Sen Gupta, the CFO of the company. Thank you, and over to you, sir, for your opening remarks.
Members of the management team? Hello? Hello?
Hey, Rajan, can you check the connection, please?
Sure. Give me a minute. Ladies and gentlemen, we seem to have lost the audio from the management's line. Please stay connected while we try to regain the audio.
Am I audible?
Sir, right now you're audible. Hello?
Can I start?
Yes, sir. Please go ahead.
Yes, sir.
Thank you, Dhruv. Good morning, everyone. I am Rakesh Khanna, Managing Director and CEO of Orient Electric Limited. With me, I have Saibal Sen Gupta, who is CFO of Orient Electric Limited. A warm welcome to all of you, and thank you for being present at the first earnings call of Orient Electric for the quarter ended 30th June 21. The initiation of this earnings call is a direct outcome of the feedback received from many of you. I take this opportunity to thank each one of you for showing interest in our business. Before sharing the developments in the quarter, I sincerely pray for your good health and safety. As the country was hit by the second wave of COVID-19, safety and well-being of employees and business partners remained our biggest concern and priority. From adoption of stringent workplace safety protocols to formation of COVID response teams, all our efforts were directed at prioritizing personnel safety. Our leadership team maintained continuous engagement with employees and their immediate families who were quarantined or infected. Support in the form of facilitation of hospitalization, doctor consultations, medicine, food delivery, etc. was provided to the quarantined families. We responded quickly to the sharp uprising of second wave of the pandemic by providing a quick response team at almost every territory to provide immediate support to COVID-affected staff and their families. All employees demonstrated remarkable resilience and empathy that brought us a sigh of relief, with most of the employees and their families now being fully safe. My sincere condolences for the few bereaved families that encountered loss of lives of their near and dear ones. The company proactively and promptly took up vaccination drive and announced free vaccination for all employees and their families. As of now, nearly 95% of all eligible employees have received at least one dose of vaccination. The company also, under the CSR, organized vaccination camps for community at large around the factories. At Orient Electric, we continued uninterrupted operations in all our factories throughout the quarter. Our logistics, sales, and service teams remained operational, subject to local guidelines. These unprecedented times gave us an opportunity to question age-old practices, eliminate redundancies, and focus on cost and process optimization through digitization at an accelerated pace. We remain connected with our channel partners digitally, ensuring business continuity and sustainability. The company reported a revenue of rupees 422 crores for the quarter ended 30th June 21, with a 136% growth over last year's, albeit a low growth base, and a 74% of normal Q1 FY20. Just to add, we had reported a 31% growth during Q1 financial year 20. While the consumer businesses fared well despite the challenges, it is the B2B business, especially the tender, that depressed the growth rate. The businesses grew at 157% year-on-year, supported by distribution expansion and e-commerce. E-commerce business grew by nearly 400% of last year. Despite the international lockdowns, exports grew by over 600% of last year. On a financial year 20 base, export is higher by more than 50%. ECD at 324 crore grew by 213% over last year and was at 76% of FY20 base. We have further strengthened our premium position in premium and deco. We have introduced new range in base and economy segments to address the bottom of pyramid. In water heater and small appliances, we registered around 100% growth. Although we have grown by more than 70% in coolers compared to last year, this is still at less than 50% of pre-COVID level. This has been second year in a row that cooler season has been significantly truncated. Lighting and switchgear business grew by 31% over last year. The consumer business in lighting grew by more than 50%, driven by consumer luminaires, but the tender business declined significantly due to lower execution of orders because of unavailability of site clearance. The professional luminaires also saw an uptick in the inquiry bank with focus on key accounts. Switchgear business faced some headwinds because it is a high advocacy product and during lockdowns, influencer programs were difficult for execution. However, switchgear business also grew by nearly 60% over last year. Our gross margins have depressed by 140 basis points during the quarter over last year. Rising input costs continued in the quarter with steep increases in commodities, especially for copper, aluminium, steel, and engineering plastics. These commodities have a significant play in ECD segment. Therefore, the adverse gross margin impact in the ECD segment has been high. Whereas in lighting and switchgear, the margins have been stable or even better. There has been a lag in price increase in ECD due to competitive scenario, and hence it added pressure on gross margins. Besides, share of ECD business increased from 58% last year to 77% this year in quarter one. As a result, the adverse gross margin impact on the total business is high. Operating EBITDA for the quarter at 22 crore was 59% of quarter one financial year 20 levels, mainly impacted by steep cost push, but grew from negative rupees 18 crore last year. We have remained vigilant on the spends. Employee expense increased by less than 10%, even on a lower base of last year. Other expense increased by 66%, which includes marketing spend that increased significantly. The non-marketing spend increased by less than 30%. Working capital has further improved compared to last year, though it has increased during the quarter due to cyclical nature of the business and strategic inventory build-up. The receivables were increased marginally as market recoveries and rotation of business were effective during wave 2 period during the quarter. Under the given circumstances, the company stood by the distributors. Readiness for the season and preparedness to service pent-up demand was the prime focus to ramp up inventory in course of lockdowns. During the quarter, we also met all vendor commitments on time. We consciously invested in working capital during the quarter. As a result, the cash surplus position consequently dropped from 242 crores end March 21 to rupees 59 crore end June 21. We have successfully added new products in fans, appliances, and lighting. We launched Falcon 425, the fastest fan in industry. Other encouraging launch in fans has been Verona fan with an IMD technology. Significant strengthening of water heaters with Urja, Prithvi, Aura, Evoke, Evapro. Our emergency lights received very good response from market, encouraging us to extend the range to batten and downlighters. During the quarter, we have inaugurated the new R&D facility in Faridabad, and we are confident that this will further boost our ability to offer better products to the customers. As a consumer-centric organization, we have further strengthened our consumer insights vertical with stronger teams. Orient Electric leveraged the tailwinds of accelerated technological adoption and continued investing on strategic focus areas of distribution expansion and market visibility, talent, work culture, innovation, brand building, manufacturing, service and supply chain, with special focus on cost rationalization and efficiency build-up. With an ambitious vaccination drive by the government for completing targeted by end December 21, reducing mortality trends and high alertness for wave 3 warning, the intensity of the pandemic is expected to gradually taper off in outer periods of the year. Hence, the outlook for the outer year of 2021-22 appears optimistic as of now. We have shared an investor release which is uploaded on website. Please refer to the same for further details. Thank you all once again for your constant support and encouragement. I wish you and your families good health. I now hand over to the moderators to commence the question answer session. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Ravi Swaminathan from Spark Capital. Please go ahead.
Hi, sir. Good morning. Thanks for taking my question. My first question is with respect to the premium fans. What percentage of our overall volumes of fans is premium fans, and how it has moved over the past 12 to 18 months?
Hi, Ravi. Thank you so much for your question. The premium fans still continue to be a little less than 10%,
Okay.
and they have steadily been improving over a period of time. The definition of premium fan, I must say, is a gray area, and we have some specific models which we consider, which has largely been above 4,000 till now, but we will have to redefine because of the recent price increases. We will be redefining the price band of premium fans.
Okay. Say about 2,500 rupees, which I think is general industry way they look at as premium fans. If that is so, how much would be the volumes as of now?
Ravi, we do not consider 2,500 as premium. They are basically deco fans.
Okay.
There is the economy range, and then there is the base range, and there is deco range, and then there is the premium range, and then we can have a luxury range. So in 2,500 to 4,000 is by and large the decorative fans. So these decorative fans plus premium would now be in the range of 45% plus.
Got it, sir. And with respect to the price increase that we would have taken to offset the commodity price increase, how much we would have taken over the past 6 months in fans and other products? You can give some view.
It's been a little different for different product categories depending on various things. One, the cost increase. There has been a different mix of plastics and metals in different products. Second, the competitive scenario has been different. So the price increase has been anywhere in the range of 15 to 20%.
Across products, you are saying?
Yes.
And in fans also, it would be in the similar range, sir?
Depending on different kind of fans, yes.
Okay,
there is no straight formula. I will not be able to say that we have increased the price by 12% or by 15% across. No. Different products, different categories, there are different price changes.
Okay. And any further price increase that would be required or would be taken over the next few months?
Difficult to say, Ravi. It will depend on how the commodity prices are stabilizing or going up or going down, and also how the market competitive scenario is.
Got it, sir. And my last question is with respect to two numbers, ad spends and capex. So how much was the ad spends as a percentage of sales this quarter, and the absolute number, and capex this year and next year, how much is it likely to be, given the fact that we are setting up a facility in South India?
So our ad spend is normally in the range of 2 to 4%. Last year was significantly less because of obvious reasons, but if you would note towards the end of the year, we again took up our advertising spend, and it was again coming closer to 4%. We will continue to invest in advertising and our brand building activities. Although the spends can go in different directions. For example, it may move from a normal conventional mass media to more on digital.
Okay.
But yes, overall, our brand building spends will continue to be there, and will continue to push building up the brand as a flagship brand.
Got it, sir. And the capex spend...
Sorry to interrupt, Mr. Swaminathan. Sir, may we request that you return to the question queue? There are participants waiting for their turn.
Sure.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Rahul Agarwal from InCred Capital. Please go ahead.
Yeah, hi. Good morning, and thank you for the opportunity. And really want to thank the management for hosting this call. It is a great initiative, and we'll request to please continue this for every quarter. It really helps to understand the company better. Sir, two questions. Firstly, on the margin side, so obviously the adverse operating leverage impacted the first quarter margins. We're back to single digits. Obviously, it's not a normal number to look at, but broadly, any direction you could provide, because fiscal 21 was a great year for the company. You did about, more than 10%. And I think the expectation from Orient is basically to improve margins year on year. So overall, any direction could you provide that, where the company is geared up to, back to double digits this year itself? That's the first question.
Thank you, Rahul. Yes, you are right. So would be our ambition to move up, and we would not want the margin to drop from the levels that we have reached, and we would further want to continue to improve the margins. And there are many things that we are trying to do. As I said, yes, we are continuing to stay very, very cautious on every single expense. We are trying to improve on our cash efficiency. We are continuously bringing in new products. We have our Sanchay project working, where we're continuously working on cost optimization. We are pushing the distribution. All of them will definitely help us to expand our top line, expand our margins, and thereby expand our profits. Having said that, I would normally restrain myself from giving any forward-looking guidance, but all I can say is that we will definitely try and ensure that we better our performance as we go further.
Got that, sir. And secondly, on the capex on the Hyderabad plant, so the earlier understanding was a bit delayed, and then we're looking at a next year commercialization, let's say about September, October of 22. Two questions related to that was, how's the progress? And second was, is that going to be a substitution to the current outsourced fan capacity, if any, or is going to be purely new incremental fan capacity is going to come up there? And any other product in the same plant are you planning for? That's my last question. Thank you.
Yeah. So we are in the final stages of land acquisition. There are formalities that we need to complete. Once we complete the formality, we expect around 12 to 15 months time to finish the project. This project is being built basically as a state-of-the-art project. We do expect this will help us to improve the productivity and the quality, essentially because of the latest technology that we will deploy there. This particular plant will help us to further improve our capacity, also to meet the growing demand. We have enough space over there, and we will be open to consider any other product that we may want to manufacture in that place. The question about will it be a replacement to outsourced fans? Well, the question of outsource versus insourcing is always a techno-commercial decision. And we will continue to take that decision regarding outsourcing versus insourcing based on the techno-commercial aspects.
Perfect, sir. Got it. Thank you so much. I'll get back in the queue. All the best.
Thank you.
Thank you. The next question is from the line of Renu Baid from IIFL. Please go ahead.
Good morning, sir, and thanks for this initiative of interacting with investors over a call. My first question is to understand a bit more on the supply chain side. Last year, we had some issues and hiccups on supply chain due to COVID. This time, how are we placed as markets have reopened, and what improvements or changes have we done to ensure that we don't face similar hiccups in the value chain?
Thank you, Renu. Honestly, I have not fully understood your question because we did not have any supply chain issues last year. Our supply chain was perfectly in order, and we managed to service the market depending on the market requirement. Yes, there was a question that our pipeline was full because of the distribution structure that we have, and we have a master distributor-based structure. where our master distributors carry a lot of inventory, and during the season, that inventory got utilized because the consumer takeoff was a little lower. We did not have any supply chain issues, and I can assure you, even now, we are absolutely equipped on our supply chain, and we will be able to service the market on the market demand.
Sure. And secondly, with the changes in the rating coming in for the fans and more BLDC-driven products on plate, how are we expecting the consolidation in the fan segment to come through, and should that help us to further improve our market shares in the region?
So, Renu, on B star rating, we are still not 100% sure whether it will be applicable from January or not, because the final gazette has still not been released. But nevertheless, it is going to happen in that period, give or take a few months. That's the best expectation. I'm sure as the new regulation will kick in, the entire industry will be prepared, and entire industry will respond at the equal speed. Making a 5-star fan or a 4-star or a 3-star or 1-star is not very difficult. It is basically upping the specification of the product, and everybody has that technology, and I'm sure everybody will work in that direction. All that we can expect from this is that the average selling price of the fan may go a little higher because the fans will be higher spec fans.
Sure. And my last question is on the GTM and distribution strategy, especially for new products that we are launching, and also to further expand the reach for the existing products in ECDs. What are the targets to expand the distribution network in the next 2 to 3 years? And if you can also share the inputs in terms of how are we placed today on the retail and the distribution touchpoint? Thank you.
So, Renu, in terms of our distribution, one of the biggest things that we want to get over is our visibility of the market. You would be aware that this market has generally been catered through a wholesaling structure, and therefore the direct influence on the retailers has not been very high. From the Nielsen's reports, we do understand that Orient fans are available at far more than 100,000 outlets. So the reach is definitely there. The question is, how much can we influence that reach? And therefore, we have today started the DMS system and the Salesforce automation system to ensure that we have 100% visibility and we are able to influence those counters and service them better so that we can extract a better share out of that. Having said that, the distribution expansion also continues because many of them would require a direct reach, and therefore we will continue the distribution expansion. We will also continue to expand on penetrating deeper inside every store in form of doing the displays inside the stores and ensuring that the salespeople and the retailers are well educated about the quality of product and the specifications and the benefits that our products offer. So we are not really measuring it in terms of a plain number. We are measuring it in many different ways, and it's a complete matrix on which we are measuring the distribution expansion.
Sure. Thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thank you for taking my question. Hi, Rakesh, sir. Hi, Saibal, sir. So my first question is that you pointed that, you're building up the inventory for the pent-up demand you see in the coming months. Just wanted to know, is there some event as well? So, for example, the inventory would have built up because of some rating change also happening in particular categories like fans. And how's your secondary sales are panning out, let's say in the first quarter? Is July being a stronger month than last year July on a secondary part? That's my first question.
Good morning, Nitin. Good question, I must say. Recently come out of the wave 2. We do not know about wave 3. The situation is unpredictable. We do not know whether the total supply chain, manufacturing, vendors, will there be a disruption? Will there be a disruption in workforce availability or commodity availability, etc. Therefore, it is prudent as of now to plan well and be well stocked. The second thing is after the lockdowns lifts up in most of the parts of the country, we may see a pent-up demand. So the players who will be able to serve the customers and the retailers with adequate and smooth supply of materials are likely to emerge as the leaders. And therefore, it's become strategically important to ensure that we are well planned on every component level and finished goods levels.
And I'm assuming the inventories at the company level or the channel would be what levels of inventory according to your view?
The channel inventory as of now is well stocked, but the channel inventory is a normal inventory. It's not high inventory. Unlike last year, beginning of the quarter, where the channel inventory was very high, this year channel inventory is not very high. It's at a normal level.
Yeah. Sir, just second question is on the margins, and this is more of a directional question. When we saw, a significant improvement in margins, every year we always aspire to grow our EBITDA margins. Given what commodities have done, and I think all electrical companies have taken price hike, despite that, everyone, including you, saying that the electrical demand is still good at the secondary levels. In that context, I understand nobody can predict COVID-3, but generally, in your sense, commodity impact should start phasing out from Q3 onwards in that case, and we can still aspire to grow more than 10.8% what we did last year. I mean, it's more of a directional question. I know you don't guide for absolute EBITDA margin anytime, but generally, how you are looking, are there still levers left where we can take our margins further improve from here?
Nitin, it's a good hope, and I do hope and pray that things become better. However, I would stay away from crystal gazing and saying how the commodities will move. There are enough reports going around whether the situation will be normal or whether wave 3 will come. We will just wait and watch how it goes.
Thank you. The next question is on the line of Rahul from Haitong. Please go ahead. Rahul, your line is in the talk mode.
Yeah, thank you. Good morning, gentlemen. Sir, I've got two questions. One on your capacity utilization across your 5 factories. Could you give us some sense on how the utilization for your factories have been? And if you can further drill down into product-wise, how the utilizations have been. And connected with the factory, what is the spending that you've planned for the Hyderabad plant? That's my first question.
Thank you. So the capacity utilization actually depends on seasonality or off-seasonality. We work anywhere between 100% capacity utilization to 60% capacity utilization, depends on at what stage, what kind of factory load do we have. Regarding Hyderabad spend, I would request Cyber to please take.
Hyderabad, the project is yet to start, but as we just explained, we are just in the final stages of finalizing the land. We have made all the payments. So far, we have made about 10 crores of payments for the land, which is available to us. And this, we will finalize the detailed project, and we will start the project very soon, hopefully in the next quarter.
But you broadly would have budgeted the amount that you're looking at, spending for setting up.
the broad estimates are around 160 to 170 crores.
Right.
This is subject to finalizing the specifications for which the work is going on right now.
Certainly. Sure. I think that is helpful. Now, the question that I had asked on capacity utilization was in the context of, the severe lockdown that we had seen across the country. So that was the capacity utilization. My second question is on the on the R&D facility. Now, you already have a decent R&D setup. We can see that from the products that you churn out. Could you throw some light on the difference or the capability that the new R&D unit at Faridabad would add? And also, if you can throw some light on the product pipeline that you are looking for in the next maybe 6 to 12 months. Thank you.
The R&D facility that we have created in Faridabad will help us to synergize all the R&D efforts that were happening across the organization. Secondly, it brings all the labs under one roof and therefore becomes so much easier to divide the work basis the technology rather than dividing the work basis the product. All the teams, the R&D teams, sit now under a single roof. Therefore, the idea synergization and working together as a team becomes far more easier. Since it's a new facility, the labs are very well made. There are all kind of labs which are there. All kind of facilities have come under one roof, and that enables the design people to think creatively, think together, and quickly work on solutions without having any constraints. So put all this together, we do hope that R&D facility will help us to further boost our ability to design and deliver better products. In terms of what new products we are working on, I will be able to share with you only when the product is launched.
Okay, that's very helpful. My last question is on the fans.
Rahul,
okay,
Thank
sure,
you.
thanks.
The next question is from the line of Bhargav Buddhadev from Kotak Mutual Fund. Please go ahead.
Yeah, good morning, team, and thank you for the opportunity. Sir, my first question is that in the press release, there is a statement wherein you have mentioned that Orient deliberately does not push channel inventory given high health risk and loss of lives. Can you elaborate on this statement?
Sorry, can you repeat this question?
So in the press release, there is a statement which you have mentioned that Orient deliberately did not push channel inventory given the high health risk and loss of lives. So just wanted to elaborate on this statement. If you can elaborate on this statement.
In view of the loss of life.
Okay. Hi Bhargav, good morning and thank you so much. I'm not very sure, Bhargav, have I fully understood your question, but let me try and answer. If you're saying that because of the COVID situation and because of the sentiments prevailing at that time, we did not push channel inventory very hard, I would say yes. We did not push the business aspect very hard. We remained clear about that human and relations are far more important than short-term business gains. However, I must also tell you that we were always stayed completely ready for any kind of inventory that was required by the trade, and we fulfilled every single requirement. We stood by the distributors wherever we realized that the distributor is finding a little difficult in terms of managing the cash. We stood by the distributors at that time. In sum, I would say that we valued our relations a lot more than short-term business. Have I answered your question, Bhargav?
Yeah, perfectly. Very, very clear. My second question is on the switchgear front. So what we understand is that the product clearly is superior as compared to peers, and we do have a right to win in this category. But unfortunately, we haven't budgeted a lot of marketing spends to push this product. So when can we expect sort of significant muscle being pushed behind this product and we sort of gain traction in this particular category?
So Bhargav, our switchgear and switches, switchgear is definitely a very superior product, and it doesn't come at a very high cost.
Yeah.
It is just that it requires understanding, requires advocacy. We have been doing a lot of electrician meets. We have been going to the contractors, showcasing and demonstrating the performance of the product, and that's how a lot of conviction was building up. However, since last year, as the physical presence and getting together became difficult, our ability to create that word of mouth got a strong headwind, and that's where we suffered a little. But I must also tell you that despite the fact that we completely refocused our energies on smaller areas, and you would see that we really reduced some pension cost which we had put in, we reduced that. Despite that, we have grown by 60%. So it's a great product. It's a product which will definitely do very well in the near future, and I do hope that as the markets open up and as physical contacts start again, we should be able to start the whole exercise of doing the dealer meets, the contractor meets, and the demonstrations, and it will again start.
So are we committed to make investment on this product? I know that Orient is sort of very careful in terms of committing investments, but are we keen to sort of create investment around this product? Because in terms of awareness, a lot of channel partners may also not be knowing that we do have a switchgear in our portfolio.
If you are saying the investment in terms of advertising,
yes.
No, we will not be immediately advertising at a large scale because we believe that the product has to first establish itself. People must understand the product because it's a different product. It won't be a sudden takeoff with a very high spend around it. But there will be a lot of BTL activity that we will continue around this product, and to that extent the investment will be there. But the BTL spend, as you know, is a little variable in nature, which will vary along with the top line growth.
Okay, sir. Thank you very much for answering my question, and all the best.
Thanks, Bhargav.
Thank you. The next question is from the line of Dhruv Jain. Please go ahead. Dhruv, your line is unmuted. Please go ahead.
Hi, sir. I had one question with respect to working capital. So last year we saw a sharp reduction in working capital, and obviously in the first quarter that has gone up. So just wanted to get a sense that where could this working capital end up in FY22, directionally, because last year the working capital had improved because of higher payable days. So just wanted to get a sense on that. Thanks.
Sure. Saibal will take this question. Okay. It is, as we mentioned earlier also, that we had resorted to very, very sharp inventory planning. We substantially improved our inventory planning, as a result of which you have seen a substantial reduction in the inventory holding and the working capital by the last year end. And we had also mentioned, and just like to reiterate, that in the immediate short run, there will be a ramp up of strategic inventory building, as was explained in the previous few questions and the opening session. So there will be some additional working capital build up happening in view of the prevailing situation, which is a little bit uncertain, and also in addition to that, some of the events and occurrences that are likely to happen, whether it is the BE star rating or otherwise. So in the forthcoming couple of quarters, the working capital will remain at a higher level. But yes, eventually from Q4 onwards, it may not be exactly Q4, but Q4 onwards, the normalized situation should come back.
Thank you.
Thank you. The next question is from the line of Hemant, an investor. Please go ahead. The line for the current participant has dropped off. We'll move on to the next question. That is from the line of Aditya Bhartiya from Investec. Please go ahead.
Hi, good morning, sir. Thanks for giving me the opportunity. Just wanted to check what will be the level of channel financing and vendor financing that we are doing currently, and how is it likely to have moved over the last 3-4 years?
So yes, I will take that question. We have got very encouraging response to both our channel financing and vendor financing programs. We have substantially moved upwards in terms of our percentages. So as we speak today, we are at more than 40% of our outstanding is in channel finance, and vendor finance is upwards of 50%. So that has been very good and encouraging so far, and we expect this to keep continuing. Obviously, it depends on the operating levels, and because in Q1 the operating levels has been slightly lower than that of Q4 and Q3. So obviously, it is going forward in future, it is likely to go up. That's what we envisage at this point of time.
Perfect. That's helpful, sir. And sir, if you could also share what's the rough R&D spends that we may be doing. The reason why I'm asking this is because I can't really spot this information in the annual reports. So what could be the recurring or capitalized nature of R&D spends, and how are they likely to have moved in last 2-3 years?
Lalita, first of all, this R&D spends, I think we had mentioned earlier as well. Our all R&D is in-house. That is one of our design strengths that we have internally. So majority of the R&D happens in-house with our own set of people who are on rolls. That's why you will not see much of R&D expenses sitting and getting disclosed in our balance sheet. What gets disclosed in the balance sheet is the testing charges and the consumption of materials that we do. They are not of a significant nature, because we do not do much of our designing through outsource. Everything is done in-house, and that's one of the big reasons why we have the R&D center, as Mr. Khanna explained a while back, the benefits of the R&D center. So that's to explain that you will not see a very big R&D spend in our balance sheet.
So does that mean that, let's say, R&D spends may be incorporated in our employee expenses or in the usual overhead cost structures and not getting reported separately? Is my understanding correct?
Yes, your understanding is correct. It is majorly coming in the employee cost.
Understood. And once we have this Faridabad facility... Sure. I'll come back. Thanks.
Thank you. The next question is on the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Good morning, Mr. Khanna, Mr. Gupta. My question is regarding our market share in the key products. If you can just provide some commentary around that, if we are gaining market share or how we are looking to gain more market share, that would be helpful.
Hi, Rajesh. Thank you for your question. But I must say that market shares in most of our products are not easily available, and there are no documented evidences apart from just one of them in fans, which is also not 100% accurate. I will restrict myself from saying that how much is the market share. What I can say is that whichever way we measure, if we see our performance and we compare with the numbers that we understand are coming from the market, there are areas where we have been continuously strengthening our market share. In fact, in the premium segment, we further strengthened during the last year. We further strengthened our market share. But put it all together, depending on the way you look at it, in fact, we should be in the range of around 18%. It's difficult to say in terms of water heater coolers. In coolers, we are, say, around number 3 or number 4. In water heaters, we're trying to be amongst the top 5. That's how I say it.
All right. And in terms of the organized versus organized, do you think the market is shifting towards organized? If you can comment on that.
I don't know what we call organized and unorganized. I would say the well-known brands versus the smaller brands. I think that's one of the ways to say. There have been many new small entrants. The big names with very small volumes coming in fresh, and they have been actually making some inroads. There have been some names which suddenly are really going out of the market. They are all shifting, but if you see the top brands, they're all significantly staying healthy or consolidating their position further. So that's how the market is shifting. I will not be able to say that some of the small ones are going out because continuously we see some of the new names emerging into the same market. So some are going out, some are coming in. The bigger ones are there, and by and large, they're strengthening the position further.
Got it. Thank you so much. That's all.
Thank you. The next question is from the line of Bhavan Batlani from SBI Mutual Fund. Please go ahead.
Thank you for the opportunity. My question is on the margins of lighting segment. And if I look at the past 4 years of data, Orient has clearly outperformed the peer set amongst the listed peer set. So if you could help us understand this by breaking up the question into two parts. So number one being the internal measures that you would have taken and which has driven the margin expansion. And second is the benefits that you would have got from the industry and the market forces, and of these, what in your view are sustainable trends?
Can you repeat the last part, the sustainable benefits we would have got from industry and?
So like if you could help us understand what are the internal measures which has driven the expansion, as well as what are the industry forces, and what are and which reasons in your view are more sustainable, which will help keep or further expand the margins.
Okay. So Bhavin, what we did is, we have in our R&D we have always put faith, and as I said, we now further improving the R&D. When we talk R&D, we're not only talking about coming out with new designs every time. R&D also means a lot of understanding of the technology. Are we working with the latest circuit? Are we working with the latest chip? And as you know, in electronics, every new generation of electronics that comes, it's always a better specification at a lower cost. The challenge is how fast can we adopt the new technology? Do we have the knowledge inside, and can we quickly move? So I think it's more a question of speed, agility, and capability building inside, and that's where the lighting team and the design engineers have done a good job, and that's what has given us a constant edge. Have I answered your question, Bhavin?
Sure. So, just to confirm, a large part of the expansion in your view is driven by internal measures rather than any external changes. Would it be fair to say that?
It is. You can see it either way. You can see it internal, because internally we are driving the whole technology adoption and staying ahead of the curve at all times. Externally, you can say that the new technology is constantly coming our way, and we are quickly adopting the new technology. So you can see it both ways.
Yeah. Thank you so much for taking my questions.
Thank you. The next question is from the line of Kunal Seth from B&K Securities. Please go ahead. Kunal, your line is unmuted. Please go ahead.
Yeah. Am I audible?
Sir, we are not able to hear you. You're sounding very soft.
Is this better now?
Much better. Thank you.
Yeah. Hi. Thanks for the opportunity, sir. My question is related to e-commerce, sir. Can you help us understand how much is the share of e-commerce currently for us in terms of distribution, and what are key strategies around e-commerce, and how are we thinking about our scaling up in e-commerce portfolio?
Excellent. So e-commerce is different in different categories. Some of the product categories, e-commerce is fairly high, even to the extent of 20% plus. In some of the categories, e-commerce is very, very small. As I said, that during this time, our e-commerce has grown up significantly, and our presence on e-commerce has grown up a lot. What we are seeing is a very sharp change in consumer behavior, and therefore it is very important to ensure that we are well present on e-commerce. And there are a lot of things that are being done to get on e-commerce. I think we need to completely think about our business very differently, be it the kind of products, the unique products, the way we are able to do the channel balancing and manage the conflicts between the physical stores and the digital stores. There is a lot of work that's happening in that area. We are strengthening our team, further strengthened our team in this particular quarter, and we believe in all categories the e-commerce share will continue to go up.
Sure. So, and but the overall share of e-commerce currently would be in single digits?
Overall, across the company, yes, it will be still in single digits.
Okay. And sir, while which categories will have the highest share in terms of e-commerce? While if you can give the number, and even if you cannot give the number, just directionally, which category will have the highest share of e-commerce?
By the nature of the products, the appliances normally have the highest e-commerce share. That's the way the industry is moving.
Okay, sure. Thank you so much, and best of luck for the future quarters, sir.
Thank you, Kunal. Thank you.
Thank you. The next question is from the line of Keyur Harish Pandya from ICICI Prudential Life Insurance. Please go ahead.
Thank you for the opportunity. Sir, two questions. First question is on, say, non-fan portfolio of ECD segment. Just wanted to know on an annual basis, what would the share, if not exact number, if whatever idea you can give. And when we say appliances, it itself is a very large universe. So, any specific areas where we are focusing on, and what are your plans in non-fan part of ECD segment growth?
You see the fans, the ECD and lighting is in the ratio which you are aware, and within ECD, fans is approximately around 70% of is fans, 70-75%. That's how it is. That's the two-thirds. And I would also say that this is not uniform. This changes quarter on quarter. So there would be quarters in which fans as a percentage is higher and their percentage is lower. During the year, it will be around 2/3, 1/3.
Okay, understood. And so, sir, generally, of course, fan is a very large portion of our sales, and that is why a large part of discussion goes towards that. But your thoughts on what are our plans towards, say, appliances or non-fan ECD portfolio, and how are you planning to grow that? That is the first question.
So in appliances, of course, we are at a small base, and therefore our growth ambitions remain high in appliances as a category. But while I say that, I'm not ruling out that our ambition in fans is very less, because even in fans, considering the market shares we have with respect to the potential or with respect to the benchmark competition, I think there's a huge room to grow. So we will be growing in both of them aggressively. Although as a percentage, we may feel that appliances growth is higher just because of low base.
Okay, understood. The second question, I think you have fairly explained why, because of their distribution system, the secondary sales are more symmetric, but your Q4 primaries looks very high, unlike many other players. So just any change in distribution that we need, or do we plan to change our distribution in a way that our even primary sales are more symmetric and not one quarter or few months centric? So an ancillary question is, so any large scale distribution changes that we require even in general going ahead?
We have no weakness or no weak link in our distribution. It's the way we recognize the revenue. See, in any other company, when the company will pre-build the stock before the season, they will build up in their branch warehouses, whereas we bill it to our master distributors. So we recognize the revenue when we bill it to our master distributors because that's the kind of structure we have. And the way the revenue is recognized because of the structure. There is no need to change any distribution structure. I think you need to see year on year. As far as our retailers are concerned, they get serviced year on year perfectly well through the year.
Okay. No, I mean, why I asked this, I think in earlier...
Excuse me, sir. May we request that you return to the question queue? There are participants waiting for their turn.
Sure. Noted. Thanks.
Thank you. The next question is on the line of Mayank Bhandari from Nirmal Bang Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir, I just want to understand, are there any plans for any inorganic growth or maybe some acquisition in order to fulfill that ambition of growth in the categories like switchgear, lighting and water heater?
Mayank, currently I'm not in a position to talk about any of the such kind of a plan. If at all anything comes up, we will be happy to share with you ASAP.
Okay. And sir, what would have been your proportion in terms of north and versus south in the current quarter? Any idea?
Difficult to talk about the regional spreads. I mean, we do not share these informations about the regions and statewide shares and our business shares. Kindly excuse me on that. But I can tell you this, that yes, North is the biggest, followed by West. South has been down because most part of South has remained under a lockdown. East also suffered because East also remained significantly under lockdown. So North is the biggest and West is followed by West.
Okay, sir. Great. Thanks.
Yeah.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you so much. Thank you for hosting the call and thank you all for joining us. Your constant encouragement and questioning keeps on pushing us to continue to improve ourselves. Many of your questions are very thought-provoking and they have always helped us to think differently and look at the areas which are weaker for us and to improve on them. I understand that some of the questions I have not been able to fully answer to your satisfaction. I'm sure you can reach out directly to us. As always, we'll be happy to answer your questions. Some of you whose questions we have not been able to take, I apologize. But yes, you can directly reach out to us. We will be happy to answer all your questions. Thank you all once again for joining. It's always a pleasure to listen to you. Thank you.
Thank you. Ladies and gentlemen, on behalf of Ambit Capital, that concludes this conference call. We thank you for joining us and you may now disconnect your lines. Thank you.